Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. VALE, a diamond or just another rock? Investment analysis. VALE S.A. is a Brazilian mining giant and one of the world's largest producers of iron ore. The company is known for its regular dividends and share buyback programs, making it attractive to long-term investors. However, given the economic slowdown, declining demand for commodities, and the risk of a U.S. trade war, the short-term outlook for VALE remains uncertain. VALE's Q4 2024 financial results. The company reported revenue of $10.08 billion, a decrease of 22.81% year-over-year. Earnings per share were 48 cents, reflecting a decline of 5.36%. EBITDA was reported at $3.11 billion. The company is struggling with lower demand for iron ore and declining margins, which historically exceeded 40% but fell to 34.26% in the third quarter of 2024. Dividend and share buyback program. VALE has approved a dividend payout of $1.984 billion. Scheduled for March 2022, the annualized dividend yield is 10.4%, making it one of the highest in the industry. The dividend per share amounts to 2.1418 Brazilian reals, approximately 43 cents per share. The company also extended its share buyback program for another 18 months, covering up to 120 million shares. These initiatives may support stock prices, especially in uncertain market conditions. Macroeconomic conditions and market trends. The United States is transitioning from an economic slowdown to a recession. Production, employment, investment demand, and prices are all decreasing, which negatively affects the commodities sector, including VALE. High interest rates maintained by the Federal Reserve further weigh on the stock market. The economic downturn in the United States and China may limit demand for steel and iron ore, impacting VALE's financial performance. Technical analysis and capital flows. The current stock price stands at $9.74, with a support level at $8.85 and a resistance level at $9.85. The average investor cost is $9.12. Capital flows indicate a significant inflow on February 18th of $27.88 million, which may suggest a potential rebound. However, there was also a capital outflow of $7.5 million on February 11th, highlighting investor uncertainty. Analyst opinions and price targets. The average price target from analysts is $12.84, with the lowest estimate at $9.50 and the highest at $18. Among the analysts covering VALE, 2 recommend a strong buy, 11 recommend a buy, and 10 suggest holding the stock. While analysts have a moderately positive outlook, there is no strong buy signal. Latest news and events. Negative factors impacting VALE include a decline in global demand for raw materials, particularly in China and the United States, rising mining and transportation costs, and potential export restrictions to the United States due to the ongoing trade war. On the positive side, iron ore prices are projected to increase to approximately $120 per ton in 2025, compared to the current price of around $110 per ton. Potential infrastructure stimulus in China could boost steel demand, and VALE's high dividend yield of 10.4% annually remains an attractive feature. The impact of the trade war and overall demand for commodities will be crucial in determining VALE's future valuation. Competitor comparison. VALE's main competitors include Rio Tinto, which has lower mining costs and a higher dividend yield of approximately 9%, BHP Group, which has a more diversified resource portfolio, and Fortescue Metals, which has smaller reserves but a stronger presence in the Chinese market. While VALE is less diversified than BHP, it has lower production costs than Fortescue. U.S. trade war impact on VALE. The primary risks associated with the U.S. trade war include potential tariffs on Brazilian iron ore, declining exports to the United States, and possible trade tensions with China. However, VALE has strong ties with the Asian market and could increase sales to Europe and India. While the trade war poses a risk, VALE has alternative markets to mitigate potential losses. Is VALE a buy? The key reasons to buy VALE include its high dividend yield of 10.4%, the ongoing share buyback program that may support stock prices, its competitive production costs, and the recent capital inflow on February 18th, which may signal a potential rebound. On the other hand, the company's revenue has dropped by 22.81%, making its financial performance weaker. The current phase of the economic cycle is unfavorable for commodity stocks, and the trade war with the United States poses additional risks. Final verdict: buy or sell. Long-term dividend investors may want to hold VALE shares for stable payouts, while short-term investors should monitor the resistance level at $9.85, as it could trigger a correction. VALE remains an attractive option for dividend-focused investors, but short-term risks remain elevated. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.